above. Tesla trading at their highest level in 2 months. The stock barely higher this morning out of the gate. The stock may continue, though, to strengthen as third quarter deliveries are expected to top consensus estimates, according to Barclays. Joining us now is the analyst behind that call. We've got Dan Levy, who is the equal rating on the stock and a $220 price target. So let's dive into this. What is kind of behind the thesis right now for Tesla for you? I mean, I think just months back we were talking about this being an AI company. We can explore whether it's still that or not, but what do you think is driving some of the momentum here for Tesla?
Great, Brad and Shauna, thank you so much for having me. Yeah, look, there's two streams that are driving Tesla stock. One is the fundamentals, and the other is the excitement over the AV AI narrative. I think if we looked to where Tesla was maybe 4 months ago, right around the time that they announced that they were going to pivot, and we saw weakness in fundamentals, there was pressure on the stock. I think since then, a couple of things have played out. First, you've seen stability on fundamentals, and you're going to see that likely with 3Q deliveries. Europe, US still sort of soft, but pretty good strength from China that have really driven stability in deliveries. And now we think that probably on track to be flat for the full year, as opposed to maybe they were tracking maybe down year over year a few months ago. The other thing is around the AV narrative. And of course, we have on October 10th, robotaxi day. Different ideas of what they'll talk about, but certainly this is the type of thing that will keep the narrative going.
So Dan, what does that tell us about margin improvement? Obviously, that's something that the street has been looking for, seeing any signs for the impact on margins. If they do see better deliveries, obviously I would think they would see an improvement, but I guess the question is, to the degree, how much?
Yeah, we do think there's going to be some modest margin improvement quarter over quarter. 2Q was a trough. You had obviously pretty weak volume. You also had pricing that was a drag, some warranty issues as well. We do think that improved volume will help. Pricing has been neutral, maybe slightly negative, but you do have tariffs coming online. So we're managing our expectations. They're still using pricing actions, but on an incremental basis versus where we were a quarter ago, maybe there hasn't been much more on the discounting side.
I mean, in terms of the catalyst from this point forward for Tesla, I mean, when we're thinking about what they've said and tried to pull levers around robotaxi or pulling levers around communicating themselves as an artificial intelligence company, how much runway is the street giving this company to prove that it can hit some of the lofty expectations that are getting priced into that valuation for them?
And that's part of the challenge. There is a valuation issue here, that I think is making some people uncomfortable. That's what underpins our equal weight rating. We think about things like autonomous, right, which is going to be the center of robotaxi day. There's a very long time frame of really truly monetizing the value of this. FSD, we think, is not really moving the needle a whole lot. And if we're talking about truly driverless ride sharing model, is going to take them a very long time to get that to scale and to be a proper business model. What could happen along the way, though, is we've fully seen that there is a narrative around this, right? And that's the piece that's somewhat unpredictable, is how the narrative plays out. But from a fundamental standpoint and seeing these businesses play out, that's going to take some time.